The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, we're on the air, folks, and we're listening to Love, Light, and Flight by Stevie Wonder, and I have to tell my one and only Stevie Wonder story. One of my very good friends from San Luis Obispo, California, was Kent Duncan, and he was also a friend of our next guest, Rich Anderson, and I happened to be trading with Kent that day. He was in my office, and we were chatting about odds and ends, and Stevie Wonder's name came up, and I knew that he had done albums for him. He had won. Kent had like 100 or more gold and platinum albums as the engineer. And I asked him, I said, "You ever see Stevie Wonder's house?" And the joke to that is that no, but neither is he because he's blind. And of course, Kent's response was, "Yeah," he said, "I built his sound studio there." And then I told him about the joke. He said, "Oh, that's really funny." And he picks up his, didn't have cell phones then, he picked up my phone, he dialed, and he said, "Hey, I got a great joke for you. You want to hear it?" And he said the joke, and I could hear a little laughter on the phone, and I said, "Oh, please, this cannot be Stevie Wonder." And Ken handed me the phone. He said, "Hey," he said, "this dude wants to talk to you." And I get on the phone, and I said, "I guess it's you, isn't it?" And he said, "Yeah, it's me." And I said, "Hum a few bars of Isn't She Lovely?" And that sort of broke the ice. And I said, I hope you realize I didn't mean that, in a derogatory way. It's just a joke that I had heard. And he said, "Oh," he said, "I've heard it a million times." Well, that's my Stevie Wonder story, and I've never, Kent's long since passed away, but I'll never forget it. We have Rich Anderson of Anderson Capital Management on the line. Rich, are you there today?
You bet. Beautiful downtown Naples.
Yeah, oh boy. Is that Italy or Florida this week?
Florida this week.
Oh, okay. I know you have to get off to the first tee here pretty soon, so thanks for coming on early. Rich, there's a couple of questions that I have for you. First of all, what is the story about the margins that the CFTC is proposing to put on these FCM merchants to, brokers that work out of their homes and also actually brokers that, work for the larger houses, where they have to put up more than 100% margin on trades. Have you heard of anything like that?
No, I haven't. I haven't heard of that one. The Europeans have added a transaction tax, which, if it were do the same thing in this country, would add $7 or $8 per commodity traded. I have not heard that. The Dodd-Frank thing has forced the major players, Goldman Sachs, J.P. Morgan, Barclays, that on their prop trading desk and on their derivatives desk, they have to maintain much larger margins than previously had to. And so, as an example, Barclays closed several units this week and laid off 3,700 employees. And there was a good deal of liquidation in the future markets as they closed down some of their operations.
Sure, these are things that the public hardly hears about, but, we hear it through the grapevine usually, so that means that costs on some of these transactions will probably be going higher almost without question.
Well, they are in Europe, and, everybody needs money. I mean, the states need money, and in Minnesota, where I live in the summertime, they want to tax you if you even spend 60 days there.
Well, 60 days in Minnesota is like being in prison for 9 months almost everywhere else.
No,
I'm sorry, Rich.
No, only in the wintertime when it's going
Every
below.
Every time I've been to Rich's house, there's been 9 feet of snow, and the highest in the day has been about 8 degrees, so I don't have much love for Minnesota.
Yeah, that's why I'm down here in Florida. But, I don't think this European tax, I don't expect that to come into this country, and it would be very hard on our industry, on the futures industry. And it would, think about it, if they added that tax to stocks, let's say you traded 100 shares of Apple. Let's say Apple was $500, and they charge the 1% tax. Think what that would be on the buy and on the sell as far as an added transaction fee. It's terrible.
Yeah, it's certainly getting really bad. But Rich, remember when we started in this business, it was nothing for Merrill Lynch to charge $120 on a round turn commodity, and
Right.
and the discount brokers were charging $50 a round turn. Now people are paying $3 to $5 for trade. So it's a big difference in these markets from when they were then. Of course, we have electronic trading, which is like being a floor trader now. Rich, I had one other question
beautiful.
someone brought up to us. What is the situation now between Peregrine Financial that went bankrupt and then, of course, MF Global that went bankrupt about the customer segregated funds? Have you heard of anything through the grapevine? I know you've had some customers that had MFG money. Do you know anything about that you could share with us?
Well, I'm hearing that I think they've got most of the MFC people have gotten close to 93%. I'm hearing that they will get the other 7% that the whoever was handling the bankruptcy has leaned on the major players, like J.P. Morgan in particular, so that because they held monies for a long time, actually helped precipitate this. It looks like, when they need to be paid fast, and all of a sudden they start paying them slow, that just makes you go down the hole faster. But in any case, I hear they're going to get whole. Peregrine, I haven't heard anything about. The other thing in the government, the sequester is March 1st, and they're divided about that. The president is threatening to not pay beef inspectors, and of course that would decimate the cattle industry and the hog industry and the poultry industry, and force the price of meat exorbitantly higher temporarily. But that's the only lever he seems to have against the automatic cuts that are supposed to go on March 1st. And keep in mind, this was his idea a year ago to put the sequester in place, and now he doesn't like it.
Well, people have the right to change their mind, as they say in the trade. By the way, Rich, I want to compliment you. When we were on the show many months ago when cattle were making their high up there at that 138 level, you were warning people that this was the time when you want to be getting ready to short cattle and not buy cattle. What's your feeling on the cattle market now? We've hit some pretty strong support points, it looks like, but is it starting to improve a little bit?
Well, with this possible meat inspector problem, it's got everybody scared. I think the negatives are getting about as bad as they're going to get. The only problem is you can't really play the Fed because they're in delivery right now, and the Aprils are $6 over cash, and historically they're between $1 under and $2 over. Still, they're still a little rich. If April cattle today got as low as $27.60, if they get back down there into the $26 area, I'm a buyer. And I think
Rich, give the folks here on TFNN just a 1-minute dissertation on the difference between the February and April cattle, why that spread of $6 a pound is there, and what it really means.
Well, the difference between the Feb and April board price is only right now $3.75, but the actual live cattle are being traded in the country for $1.23 to $1.24. The February board is at $125.22, the February futures, and that premium is about what it would cost to deliver cattle. And so because you have white loss, you have snowstorm possibilities. It's not a fun time to deliver cattle in February, and the April. Normally, beef demand picks up between now and April, and that's why April's a premium, but it normally isn't this much of a premium. So I'm waiting for that premium to disappear a little bit. I think it'll happen from the April, probably coming down a little bit more, and the cash price is starting to catch once they stop worrying about the meat inspectors. And the other thing is a beta agonist. It's Zelamax is one of the brand names, which has been used to fatten cattle in the last couple weeks. It adds 15 pounds of muscle. Something like Taline is used in hogs. And there are all kinds of negative stories on that right now. And that's the other thing that's in the psychological part of the bulls right at the moment. They're a little worried about more stories about that.
Yeah, with weather this cold, they don't pick up any weight, do they?
So. No, they don't. But the average weight is 40 pounds a head higher than a year ago, and that's like killing an extra 15 to 20,000 head of cattle a week, and that's why the prices haven't been any good. It's been too nice a winter until just recently in the last 2 weeks.
What I don't understand is that if they gain so much weight, what do they feed them? Considering we had wheat and corn and sorghum and everything was so high this year, what were they feeding them?
Well, they were feeding them corn. They were feeding them high-priced corn. I have a friend in Nebraska. He had a load of a pen of cattle he sold 2 weeks ago. He lost over $300 a head on. They're feeding him high-priced corn.
Wow.
And right now, our corn prices have come down. As you know, the board down 3.5 cents here today. But in the cash market, last night, Korea bought corn from Brazil for $30 a ton under U.S. So we still have, we have a real tightness in the nearby, but new crop, there's going to be plenty because South America will be done harvesting. But the flip side of that is we had 2 ethanol plants in Nebraska come online today, and we have several more coming online towards the end of the week, and that'll be another demand source for corn. And then in the beans, the Chinese are coming back from the Chinese New Year's, and they have some of the most profitable crushing rates they've seen. So there'll be continued demand for beans. We've already sold 93% of the beans for the year, and we're only halfway through the year. Most of the new sales will start coming from South America, but they have a tendency to have strikes, and they don't have the modern technology we have, so they can't load their boats in rain because so. It's like a 35-day waiting period right now to get your boat into port to load it up with grain. So they got the bottleneck. Well, those are kind of the fundamental things. I'm a technical trader, but
yeah, I know. Hey, listen, I know you have a very important meeting coming up at 1:45 in a half an hour. Just make sure that you use a 3-wood this time instead of the 1, okay?
Yeah, you don't
want to shank that thing into the trees again.
Yeah.
Hey, listen, thanks for joining us, buddy. I really appreciate it. We'll have you on soon, okay?
Take care. Thanks.
Okay, thanks a lot, Rich. Okay, that was Rich Anderson of Anderson Capital Management. Folks, we've got a failure happening right here in commodities. We started this show by posting the silver chart, and it was holding the 30.48 level per ounce, and we have now broken down in the silver. We're way below the 61% retracement. We're below the ABCD level. That means that gold is most probably doing the same thing, and I will post that in just a second here. If we come into the break, I will still post it during the break, but here it is. I've got to pull it up here, and someone mentioned that Rich Anderson knows an awful lot. That's the understatement of the year, folks. I've known him a long time, and he certainly is a professional here. Okay, we've got to take a break here, I believe, now, and I'm going to post a chart for gold here, and you'll see that it's breaking below the 786, and we're getting really close down to that 627 level, which is a 61% on the daily. So breaking below that, it's sayonara. Boy,
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. I posted into Tiger TV the charts on silver and gold and showing you that they are breaking down from those levels that we talked about on Monday. And they held there for several days. They even held earlier this morning, had a little bit of a rally, $5, $7, $10 in gold and 20, 30, well, actually about 40 cents in silver. And then they've, broken down below those levels. That is extremely bearish, folks, because these are breaking below 786 retracements, and the odds of them going to a 1.27 expansion on these, which takes gold below $1,600 an ounce, is quite easy. The really key figure to watch, and believe me, there is a lot of stops below $1,625 per ounce in gold, in my opinion, because it hit there so many times, and it was such a very strong Fibonacci number, and it led to a huge rally of almost $100 an ounce. And so this is very, very important. Many of these commodities, are rolling over. We've got corn down, wheat down, beans down. Rice has held up a little bit. Cattle have been down ever since the butterfly pattern, 4 or 5 months ago. And, lumber is still up, but, that's a very, very small market, mainly because most of the lumber people are out of business because of the housing debacle that we had in 2007 and 2008. So the commodities are starting to roll over. And if you remember in 2008, this is one of the reasons that things started down. Now, these hedge funds, when they all start to head to the door at the same time, they make it difficult to get out. So you have to pay attention to that. There's another chart that I'd like to point out to you regarding the gold and silver that we've been concerned about for quite some time when we went below the 786, and that is the gold and silver index. That's the gold and silver stocks. Not only did it not rally during this last run in the stock market, nobody had any interest in buying them, and now they're breaking down, below the 786, and now they're breaking down below the lows that we made in January. That in itself is a very, very negative sign, no matter how you look at it. These are the weakest stocks on the board as far as overall relative strength, and that's why you'd want to be, really careful in buying them here, because they look like they're just failing. Something is wrong. We talked about copper, on Monday's show, and it hasn't broken below that 370 per pound level, but here again, it hasn't gone up with the rest of the rally in the stock market. I particularly enjoyed the part that Basil talked about, and I really respect all the guys here on CNBC, what am I talking about? TFNN. I respect all their work, and when Basil was talking about the rotation that's going on in stocks, that's certainly true, and we had that happen in 2000. Between 99 and the year 2000, when the market was topping, we had the same type of rotation. His comment about it's the worst hated bull market that he can ever remember. I can remember one other one that was almost as bad, and that was the one that started after the bottom in 1982, and that one lasted well over 7 years. And that's correct. That 82 bottom was one of the most important astrological bottoms that you will ever see. There were 6 oppositions and conjunctions at that time, right on the date, August the 9th, 1982. I remember that very vividly, because within a day or two of that, Henry Kaufman, who was the lead economist for Salomon Brothers, Salomon Brothers came out and said interest rates, are headed lower, and boy, that was it. The stock market took off like a scared rabbit, and it never looked back. So this is, a case of, things going over. When we come back, we have a short break coming up here, but we come back from the short break, I'm going to share a chart that shows the past decade of the periods of, the most bullish and the most bearish, environments in the market. We look at the VIX index all the time, but it's a study from Merrill Lynch, Bank of America division, and it really shows, some of the things that are happening, and we are in record time now. We're in an area where we've never been before. We're in an outlier event, not like we were in March of 2000. That was Giddyland. Old people, anybody over the age of 40 will never see that type of thing again. We've got to take a little break. When we come back, we'll talk about bullish consensus, and then we'll get back to commodities. 877-927-6648.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I wanted to post a chart here that I think it really shows a lot of information on a technical basis. It comes from the Bank of America division of Merrill Lynch, which is part of B of A. It's been posted on Bloomberg and Global Financial and Lipper Financial, and the CFTC's put it out, and then also MSCI. So this has been around for a couple of days now, but it basically shows the overbought and oversold conditions. In other words, the most bullish and bearish situations in the market over the past 10 years. And as you can see, it has actually reached the top of that green arrow now, so it's surpassed the most bullish part that we've had in the market. This means that is extremely bullish. There's very few people left to buy, supposedly, if this is correct. And this may be why the market is rotating like Basil is talking about. We know of all the pattern completions that we have going on. But this, if you were long stocks and believe in technical analysis and can sleep, I think that you have a terrific way of sleeping, because I wouldn't be able to sleep if I owned stocks with a chart like this. This is very, very scary. This is about as scary as looking at Apple at $700 a share, in my opinion. But we will wait and see how it turns out. But this is what's being shown on the financial channel. So I think it's important that we take a look at it because it does show the butterfly patterns. It shows the 3-drive patterns. It's got some really good information. So if you get a chance to go into Tiger TV, I would certainly do that. By the way, Basil is having a webinar, a free webinar. All you have to do is to subscribe. You've got to go to TFNN, and it's certainly great information. Basil really supplies a lot of wonderful information. Now, I wanted to get to one of the commodities that affects all of us, and that is the price of gasoline. We had a Gartley form 2 weeks ago. The market went sideways. We had gas here in Tucson at $2.81 a gallon just a couple of weeks ago. We are now up to $3.39 a gallon. It's moved just about 50 cents a gallon, and so something is happening in the gasoline market in Tucson and all of Arizona because it really is a big move, and this pattern is failing. It's breaking out above the 786, and it's doing it with a wide thrust. So that tells us, looks like it's going to go a lot higher. Now, on the crude oil front, we have not broken through that same level on the crude oil, but we're very, very close. We only have to get above $98 a barrel, and we will do the same thing. We got a call from Rick in British Columbia. Are you there, Rick?
Hey, how you doing, Larry?
I'm very good, thank you, my friend. What can I do for you?
I just think it was very interesting, the overbought situation you just mentioned. For 2 weeks now, the bulls compared to bears have been, very high. But I'm just looking at the SPX, and I got it on a 3-day, and I think we got a little inverted head and shoulder formation on a 2-day, actually, and I think it's going to take us to about 1528. And then I'm looking at a stock that's been very strong, and that's Goldman Sachs, and it's going up today, and I think we're going to have more volume than yesterday, which is usually bullish. Very short term. I just think we can still go higher yet, and I just thought I'd phone in and mention that to you.
Well, we could certainly go higher yet. Now, I'll put the SPX. The SPX is basically the cash S&P, correct?
It is, and if you put it on a 2-day or 5-day, you'll see a nice inverted head and shoulder formation. But we know that there's head and shoulders all over the place.
Yeah, absolutely. There's no question about that.
But I'm looking at a stock like Goldman Sachs, and some of these, it's been strong. The volume hasn't been there. But today's volume is, to me, looks like it's going to be higher than yesterday, which is bullish, short term. So I just thought I'd bring that up. That's something that I spotted. Hopefully I'm not out to lunch and mentioning this. But
well, even if you're out to lunch, you're in a wonderful place to have lunch up there in British Columbia, my friend, so you can't do anything wrong with that.
Yeah. So anyway,
what I'm going to do is I'm going to put up the chart for Goldman Sachs, and if you want to buy this stock, I want you to be my guest because I want you to take a look at this if you get into Tiger TV because we have just hit 786 retracement of 2011 at 156, and we're trading at 156.10 right now. So be my guest on this one, Buckaroo. I wouldn't touch this with
oh no, don't get me wrong. I'm not. Hey, I'm not buying. Don't get me wrong. I'm just saying.
Yeah, we can go higher, no question. I mean, all these things.
Still go higher, and the euro had a big sell-off this morning.
Yeah.
And the market really never sold off, so I think the euro might get a small bounce tomorrow, maybe into Monday, which could drive the market higher because most of the time, with the euro sell-off today, we didn't get much of a sell-off in the market.
Well, that correlation it only works about 75% of the time. And, so the other 25% of the time, things are moving. Remember that the Forex is the real market that's real cash moving. These indices and stocks and stuff that we trade, those are, just drops in the bucket compared to what happens in the Forex market. So, keep that in mind, too. Just try to look at what you were talking about is, watch the prices. If they're going up, most probably they're going higher, and if prices are going down, most probably they're going lower. That's the main thing that you want to try to look at.
Yeah, okay. I just thought I'd bring this up, that's all.
That was great information, and believe me, I'm watching the SPY because, over the past 4 or 5 days, it's, frankly gone nowhere. The one that really goes up all the time is the small cap, and, that's a very, very small index in itself. So, I don't watch it nearly as much as I do the S&P, and of course the NASDAQ. Also, I watch very closely.
Yeah, no, exactly. All right, thanks, Dave. You take care.
Hey, Rick, thanks for calling in, my friend, and a Happy New Year to you and your family, too. We'll take a look here. I know we're in commodities, but we want to take a look at the NASDAQ because we are also completing a bearish Gartley pattern in the NASDAQ. We completed that 3 or 4 days ago. This market hasn't turned over yet, but, when it does, markets that go up as fast as they do, like they've done in the Dow Jones or in the Dow Jones Transportation and in the IWM, the small caps, they have a tendency, to come down the same way. Just remember that history does repeat itself, so that's something that you certainly want to keep in mind. But we do have a bearish Gartley on the Goldman Sachs today without any hesitation at all. That's exactly what we have. The one that we need to look at now is our corn market because it has been breaking down quite a bit here recently. And what I want to try to do here is, for some reason, I have lost control of the mouse that controls the price of corn. So, since I've got wheat here, I'm going to put the wheat up first, and we'll make it a little bit easier to take a look at, and we'll see where we are on wheat. We are at the door of opportunity in wheat, folks. That's all I can tell you. If we can get wheat down about another 10 cents from where it is right now, that's around the $7.17 per bushel level, you're going to have a really nice pattern forming that is going to be a butterfly pattern at a 61% retracement, and this is a 61% retracement off the whole drought move, and that in itself is a really big thing in my opinion to watch it, and that's the main thing is you got to pay attention to those things. Remember, folks, the main thing is that when you're doing these, the main thing that comes first is the ratio. The second thing is the pattern that's there. And when they both come together, then you have a really good opportunity. But they don't work all the time. If you'll just, be patient and wait for some of these, it's okay. Now, we tried corn. We tried buying corn at $7.27 last week. We took a 6-cent loss, $300. And we have not re-entered that position as yet. So what we want to do now is to see where we are in the corn market because we might have another opportunity, to be a buyer of corn because I'm still very bullish these commodities, on a longer-term basis. And what we've done now is we've come down and we are at the 786 retracement of this last move, and that tells us that we have another small chance. What I mean is a small risk to buy these commodities, and especially corn. So, we're looking at March corn. We first looked at it at 704 with a stop at 697. We actually got a little bit better fill. But now what we want to do is to go down to a 30-minute chart, and what we can do is we can refine it just a little bit in order to show you that you can take some of these things and make them relatively easy for picking a good spot to buy. So if you take the last low that we made back in January, you'll see that we came down to the 786 retracement. Now that's down from the 727. That saves you a whole lot of money. You don't want to be long that, so you've got to nibble away at it. So now what you have going is you have you're at the 786 retracement, and then you have a really nice symmetrical head and shoulders pattern, and this is a 30-minute chart, so it certainly gives you, several days to look at the head and shoulders pattern. The low today has been the 786 retracement. As a matter of fact, if you blew it up really good, and that's what I'll do here for Tiger TV, you'll see that you stopped right at the 786 retracement, and that was the best place to buy it was down around that 691 level, which was the 786. So that's how you try to refine, where you are within these patterns, because folks, they only work about 65 to 70% of the time. That's all they work. But believe me, the payoff is far better than the 35% risk that you take on the ones that you lose. And some of those you can get to break even pretty quickly. But remember, if you're right 65% of the time and you're making 1.2 or 1.5 or 2 to $1 for every you're putting up, these are tremendous odds. I mean, these are probabilities and odds that you never get on any gambling event. I mean, Vegas wouldn't last a week if they had odds like that. But what you have to do is you have to identify the patterns. The main thing is that you have to control your risk so that when you're wrong, you step out of the way. I noticed today that Zitow in the room, John, who's one of the better traders in there, he bought silver at the right spot, and it moved up, and he got out, took his loss, and it's exactly what he should have did. If I had the time, I was going to drop him a little private message and say, great job. That's how you trade. And that's the loser. The winner don't mean anything. I mean, you don't have to be a rocket science when you have the winners. It's when you learn something from your losers. That's what you have to understand is every time you lose, you have to learn something. The old Chinese adage is, the smart man learns from his mistakes, but the wise man learns from the mistakes of others. And that's really, what you're trying to do is to learn from the mistakes, like yours truly, because I have made them all many, many times. So that's the real secret is to learn, your mistakes from other people. But, one of the main mistakes that people make, of course, is when they actually overtrade and then they don't use a stop. And overtrading, if you're putting more than 10 trades on a day, you're overtrading. Your days are numbered. It's just a matter of how much they're going to take away from you before you finally give up the host. And that's the bottom. That's the bottom line. We had a request to take a look at the futures for natural gas because we've been in a downtrend on these for quite some time, and we are forming a bearish Gartley right now. But the problem is this Gartley pattern that we're having has a very wide-ranging bar today, and so you have to be a little bit careful. Give me 1 second, and I will put this into the room, and you'll be able to see this wide-ranging bar, and it will also tell us that, the ABCD that's present in this tells us that we're going down at least to make another double bottom down around that 308 level. So it's another, 5 cent lower. That's really the thing that we're watching in the natural gas market. So this is, what we're looking at. We're seeing a really strong breakout in gasoline futures. There's no question about that. And why gasoline's going up, I'm not sure. But we've got a little break here. Give me a few minutes, and then we'll come back and wrap up the show.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time.
Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and we've got our friend John from Philadelphia calling in today. Hi, John. How you doing?
Hey, Larry. Good morning to you. I have to tell you, I'm much obliged for having Rich Anderson on. The stuff that he shared today for me was invaluable, and so many factors, very complex markets. So it was an eye-opener for me, and I appreciate it.
Thank you. I'd like to have
Hey, Larry, I wanted to ask you about soybeans, and before you give me that, I wanted to share with you just a tip that I learned many years ago that I found very helpful. Specifically, now that we're almost to the month of March, I will tell you I personally am doing the following. When I'm trading and analyzing corn, soybeans, and wheat, right at this period of time, I cease looking at the old crop contracts, would it be the March, the Mays, or the Julys, and I start focusing on the new crop contracts, which would be July wheat, November soybeans, and December corn. And I was taught this many years ago by a good ag man, And the idea was starting early, looking at these new crop contracts, the ones that haven't even been planted. You get a real good sense of the patterns, and then you can start trading the upcoming growing season. So I just wanted to share that with you and ask if sometime in the near future you could share your analysis of, say, November beans, December corn, and July wheat.
I certainly will, and if we have time, what I'll do is I will try to put up the November 13 bean contract right now if we have a minute here, and we do. But I've already posted the one for March, in the den, and you'll see that they're very similar. But the November contract has not reached the 61% retracement level yet. It's still got another, 20 cents to go on the downside, which could be a very, very positive thing. But watching the new crops and the old crops that's incredible. You can't trade the grains without watching those because they're two different commodities. One is being planted and the other is being, is in the bins already. So you have to be able, to use that. Frankly, John, that's one of the reasons why I love Forex so much, because you don't have to do all that thinking, because it's just money being moved. But with the grains, look at these.
Yeah, I know, Larry. You have a point. A lot of thinking required there.
Yes, this is true. You've got to do a lot of it. But what we'll do on next week's commodity show is I've already written a note. I'm going to look at the difference between new crops and old crops and try to explain why that difference is important, because, we don't have any idea how many new crop beans we're going to have. We could have another drought, next year, or we could have a bumper crop. We really don't know. The only way we're going to tell that is by looking at the charts and to see if prices, start to go up or down. And then, of course, we have to keep an eye on the weather, whether we're going to get enough rain or too much rain, all those factors, that are come into it. I want to commend you for bringing this up because, a lot of our listeners, don't look at commodities, and they should, because there's some great opportunities there during these times. But we'll look at old crop, new crop next week for sure.
Larry, I appreciate it. And thanks again for having Rich on. That was great.
Oh, yes. Thanks a lot. Folks, if you have anything that you really want to take a look at today after today's show, is look at the chart about the bullish consensus of the bulls and the bears, because it's very dangerous.